In this video, I'll be sharing with you simple price action trading strategy for trading derived step index. As you can see on my chart, this is derived step index. This asset is being offered by a derived broker. From my years of experience and trading, I've realized that no asset respect price action like the step index. And in this video, I'm going to show you basically 3 ways you can trade it. First, by using support and resistance, and as well as how you can use your trend line. Now, what is support and resistance? Support and resistance are simply point of price reaction. There are many instances whereby you see price will be moving this way. Price will move to a certain level, come down, move up, come down, move up, come down, and move up. So, if you observe critically, you realize that at a point, price moved to this point, right? Then price came down. And after that, price reached a particular level because at initial price left 0.1 and moved to the upside. Return back to 0.1. So any zone price left, like for instance, price left 0.1 and went up. Any zone price left from the downside and moved to the upside is being regarded as a support. It is a support in the sense that this movement of price is established on a particular zone, and that is the zone we call support. So when price moves to the upside, and from that upside, price returns to the downside, it means that price has established another scenario there. And that scenario is what we refer to as what? As a resistance. So this is a resistance. So price leave point 1, which is support, to hit point B, which serves as a resistance. So once you have this first price movement from 1 to B, all you need to do is for you to mark out that zone. And then you go to the upside and you mark out the other zone. So if we label this zone, it is this zone that we tend to call this as a support, and then we tend to call this as a resistance. Once this is established, your expectation subsequently becomes price to move back to this zone. If this is actually a valid resistance, it should be able to resist price. It should be able to become a hindrance. Instead of price going up, it should push price back to the downside. And that is exactly what happens in this scenario. So price moved to this point, and eventually price got resisted, and then it was pushed back to the downside. I remember when price left here has been a rather established zone. So you are expecting price to come into this zone and again get rejected from there, and eventually price was rejected. It went back here. We already have an established zone here. Price retested, it went back, and it continued in that manner. So when you have this perfect price rejecting in this way, is what we regard to as support and resistance. However, this type of support and resistance is regarded as what we call static support and resistance. So this is a typical example of a static support and resistance. Now, if you take this further a little, there are situations whereby price will break out of this zone. And when price break out of this zone, we call it a break of resistance zone. It is important to know that whenever a resistance zone is being broken, it will eventually become a support. And how does that happen? price will pull back, right? Price will break it, so it is no longer a resistance. If it will resist, price shouldn't break it. So since it couldn't hold price break it, so it is no longer a resistance. So price will come back to it, retest that resistance zone, and then get a support and push to the upside. So this support that was getting obviously has changed this zone from a resistance zone to a support zone, because price came back to it and it supported price, so price continued to the upside. So it is no longer a resistance zone but a support zone, and price will now move to the upside to create a new resistance zone. So this is how this principle works. So in this scenario, when price make this movement and break, retest and continue to the upside, price has established a new pattern, and this pattern is where we can now connect our trend line this way. So once you have your trend line connected this way, you see that it is no longer horizontal but a slant vertical movement. This is what we now refer to as a trend line. So this now is our trend line, and in this scenario it becomes a dynamic support and resistance. And this is exactly what I'll be showing you in this video, how you can scalp this step index by applying these simple trading techniques. If you look at our chart, what we just illustrate is what happened here. Price went, came down, went, so you can see how price keep on moving in this zone. Alright, so now let's move to the chart again and see exactly how this plays out. Now let's look at, first we talked about what? We've talked about static, support and resistance. So if you look critically at this price movement, you realize that price left here, went up, came down, went here, right? So when price left this zone automatically becomes a support zone. Okay, this zone becomes a support zone, while here becomes a resistance zone because it resisted price. So price returned to this point. So we had that return of price from here to this point. So immediately price came, we will now mark out this point, this zone, and look at what happened. Because price already left here to a resistance, so coming down we will have this point marked out, and then we'll have this upper one too marked out as a zone. So look at what happened now. Price pulled to that zone and then reverse. So we'll sell from here. When we get a candle confirmation, price pull back to here again, and then we'll buy from here. Then price pull back to here again, we'll buy. It went up, we'll sell, and then you see it come here again, we'll buy. And then you see here we are expecting price to get a resistance, and if it doesn't, it will break it, and that will be a change of price direction. So that is how simple this concept works. So now let's look at in a case of dynamic support and resistance, which is what we regard to as a trend line. So look at how this plays out. First, price has been moving in a downside. How was it? You realize that in this case, so look at how practical this can be. In this case, price has been going in a dynamic way. We have this, we have this, we have this, we have this. So this is a static. So this is our resistance zone, and this is our support zone. Then subsequently, price changed the pattern. When price got to this point, right, this is a support zone. Okay, price break out of this support zone, And when price break out of this support zone, obviously there is a rejection of price from here. So here becomes our new point of resistance. So we'll now extend this resistance to the downside. So price does what? Price retest this, price came down, price retest this, and then price break out of this zone. So you now realize that if we connect our trend line, we'll be having something like this. So this is no longer a static support and resistance, but obviously it becomes a dynamic support and resistance. So for you to connect this point, it is simple. All you need to do is for you to pick your instrument and mark out this zone. It's a very simple thing to do. Just pick this and then you can mark out your zone carefully well. So this is the zone I've marked out. So I'm marking out my support and resistance zone. So you can see that very simple and perfect. So I've marked out my zone of support and resistance. So this is how you mark it, and then you wait for price to move in between for you to trade. And if you are using your trend line, you kindly pick your trend line and then you mark it this way. Now for you to connect your trend line, you will always need 2 points, right? And what are those 2 points? You can either connect your trend line to point A and point B. So you'll be waiting for price to retest it so that you can trade from point C. And then you can see here we have a bearish engulfing candle, and that is our trade entry. Or you can connect, if you look at in this scenario, the first point of connection was these 2 points. What is the point? Point 1 and point 2. But if you look at this, price came, retested, so you see that entry, you would have sold to this point. Okay, and then that is how it works out continuously. Then you must not be rigid about it. You realize that price break that zone here, break the trend line, but when it went up, give you a bearish candle confirmation. So you can pick another trend line and connect it this way. You carefully pick another trend line, connect it from this point to this point. So what that means, you will now be waiting to make another, your next trade entry would have been this, and this is how it plays out. Thank you so much for watching, and if you are yet to subscribe to this channel, please do well to click on the subscribe button. Subscribe, turn on your notification so you'll be the first to get notified when we upload the next video. Thank you, and see you in the subsequent video.